Hi, and welcome to the Stockscores Market Minutes for February 16th, 2015. Today I want to talk a little bit about how resistance works. Now let's first of all explain what resistance is. It is a ceiling price that tends to limit upward price movement. It tends to reside at past price peaks. These are points where the buyers in the past lost their motivation to pay higher prices. If you think about it, where a stock stops going up and starts going down, you've got this upper limit of what investors think the fundamentals are worth. Now, typically then, when stocks rally up into that same resistance price, that same ceiling price, they tend to get stuck. Investors remember that old price peak. Now, the best way to break through resistance is not to rally up day after day after day and then go through, but rather to rally up to that level of resistance, stall, go sideways for a little while, and then make that breakthrough. And that is when you have the greatest chance of moving into an upward trend. Let's take a look at the chart of Apple, which this past week broke to a new high, broke to all-time highs after trending sideways for a little while. What I want everyone to note is first that there was this price peak here in November of 2014. Price fell lower. It went back up again, but it was rallying up into that resistance level where it got stuck, and it went sideways for a little over a week. And it was only here, this breakout through resistance, that really mattered. Notice that on this day, it tried to get through that ceiling price and failed, and it tried for a few days but couldn't break through. If resistance is to be broken, generally, you need to see that sideways price action first, building a base that the stock can then break through from and move into an upward trend. All right, let's get into this week's analysis of the overall markets. The S&P 500 had a good week last week, and it has now closed at a new closing high at just around $210 for the S&P 500 ETF, SPY. That is a sign that the buyers are back in control and that this long-term upward trend, which has been in place for now 6 years, is going to continue. However, realize that the market rallied into that resistance level, so we could see a little bit of a pullback in the short term as the buyers and sellers argue whether that breakout was in fact legitimate. If we look to the shorter term chart, you can see the break on Thursday through resistance that had been building, and there you see that break right there. And that really brought price up to those all-time highs. So it is likely that it will stall here for a little bit, but in general, the market looks very positive and likely to continue that long-term upward trend. All right, here's the chart of the Russell 2000 ETF, and this is the one that I think is most noteworthy this week because for about a year, the Russell 2000 small cap sector has been bouncing under this resistance level but unable to break through. Now this week, it finally closed at a new high, and it did so after about a year of sideways trading. That indicates that the next leg is likely to be a lengthy, long-term upward trend. Sort of like what we had back here in late 2012, which led to this long-term upward trend, we're now seeing here with this recent breakout. The TSX has been rallying as well. It is now coming up to resistance, where it will probably get stuck. We'll probably have a little more upside potential in the very short term, go sideways, and then perhaps break through that long-term resistance. I don't expect, however, that price is going to make a significant breakout this week because it has been rallying up to resistance and it's likely to stall at that price. It's kind of like back here is what we are now seeing in the Russell 2000, where you had this long-term sideways range and then finally that little breakout there that led to the upward trend. We're seeing that in the Russell 2000 now, but in the TSX, it's different because the rally is coming up to resistance and it will likely stall at that overhead price. Here's a chart of the TSX in the short term, and you can see that we broke out on Friday. That was led primarily by some strength in the energy sector, so that's a good sign that we've got a few more up days ahead of us. But remember, on that longer term weekly chart, we're coming into long-term resistance at the old highs. Here's a chart of the TSX Venture, which is really trying to turn around, but it is far from a bullish chart. We are starting to see some life in the TSX Venture stocks, but it's pretty minimal at this point, and I think you still need to be pretty cautious with this group. Here's the Treasury bond ETF, TLT, the 20-year US Treasury. You can see it went parabolic, and I've been calling for a pullback to the long-term upward trend line. We saw that continue again this week, and I think there's still more downside in the Russell 2000, which means interest rates are ticking higher in the United States. US dollar also went parabolic. We've talked about that in recent weeks, and here you can see that parabolic trend, and it's now likely pulling back to that long-term upward trend line. Now, this is one of the factors that is giving some support to oil because there is a very strong correlation between oil prices and the US dollar. It is an inverse correlation, which means when the US dollar goes up, oil prices go down. And that's exactly what happened through this time period. Now we're starting to get a pullback in the US dollar, which means oil prices are making a little bit of a recovery. The weak US dollar or a weakening US dollar should help gold as well, but it hasn't been. And I've been pretty cautious about about gold, simply because it is coming into that long-term downward trend line there, which is exactly where we got stuck. That's the resistance level. We need to fight with that line of resistance for some time before we can break through it. And as it is now, it is still stuck in that bearish pattern. There you can see the bounce back in oil prices. And although it's been a pretty good bounce back over the last 3 weeks, it has not broken the downward trend line. And it is in fact at the downward trend line this week. So that is our line of resistance. Look for the market to get stuck there, and it's only important if we can break through that line and continue the bounce back in oil prices. At this point, I think we need to be a little cautious because the bounce is in. Here's the fear index. You can see a little bit of a jump in the VIX this past week, and that is a bit of a surprise, I would say, given that the fact that the market also went up, but it indicates that prices at the end of the week this week, basically investors are a little bit nervous about that rally into resistance and bought a little bit of insurance at the end of the week last week. So my outlook then, bullish on US stocks both short and long term. Wouldn't surprise me if we see a few days of consolidation in the short term. Canadian stocks neutral long term because we are underneath that long term resistance, but short term we broke out on Friday, and that is an indication that we've got a little bit more upside until we get up to that long term resistance. Gold long term neutral, I could probably even put that bearish. We are still below that downward trend line. And we saw selling pressure last week because we hit that downward trend line. Gold is struggling with that long-term turnaround. Oil, long-term bearish. We're still in a steep downward trend, but at least there's some stability coming back to the market. So I have a neutral rating on oil. So US stocks broke out to new highs this week, and Canadian stocks are working back to the highs. US dollar weakness is helping oil, but it now faces resistance at the downward trend line. Gold is losing its luster, and I recommend you be cautious with gold right now. Well, that has been the Stockscores Market Minutes for February 16th, 2015. Have a great week in the market and trade well.